Hey, welcome to my live stream. It is Tuesday, February 18th, and the market has closed. We had the day off yesterday. It was President's Day, so no trading yesterday, and we will be having a shortened week. It's a short month anyway. It's 28 days, and we've got I guess set 8 days left after today. So we'll see how the market behaves. It's been a weird market to try to predict this year. It's I think we've seen a rotation, and it's been a long time coming to see a rotation out of those uh, magnificent seven stocks and see that money rotate. How you doing, Sergio? Good to see you. Thanks for joining the live stream. And what I thought I'd do is just take a quick glance at the stock market, the indexes, and then I've got a list of stocks that I wanted to go over. If there's a stock you want to look at, looks like Bill is already on the list. Impulsive Hamwich. Good to see you again, man. Yeah, we can take a look at Bill. We've looked at it a long time ago. I think the last time I looked at it, the market did not like their earnings and really sold the stock off. So let's take a look at it. I'll give it a fresh look and we'll see where it's at. And then Sergio, you want to look at Bumble. Okay, we'll look at Bumble. BMBL. Cool. We'll look at those two there. Perfect. Jay Zev. Very good to see you, man. Thanks for joining. Appreciate it. We're 7 strong. Thanks for joining. So the market, ended up in the green, but it spent a good part of its day in the red. And so far, okay, market. It's just been a little bit of up and down, a little bit of swirly. And looking at, the day trading, it spent a good part of the day in the red. If you look at the S&P, then it jumped back up, which is good. That's good to see. And if we look at the year to date, from January 23rd to this point, it's pretty flat. So we're coming up on about a month where the S&P is a little flat. But overall, pretty good. If we ended February with the S&P up 4%, if you annualize that, we're back up to 25%. So I don't think anyone will complain about that kind of return. So the indexes ended up in the green. That was good. Crypto was really struggling, and it's in the mid 90s, and we'll see where it goes. I think right now there's not a lot of like enthusiasm that I'm seeing. There's nothing like everybody's amped up about something. I think a lot of the stories are beginning to get old, like the data center. It's getting a little old. Some stocks are fading. The data center build out, Amazon got sold off, Microsoft got sold off, Google Alphabet got sold off when they bragged about how much money they were spending on the data center. So that's beginning to get old. So we'll see what story is going to really drive stocks up. Some of the stories out of the gate that are working. China is beginning to work, but I'm not going to declare victory there. I think it's just getting a little better. When you look at the big caps, there's a lot of red here, especially today, right? Apple went down a little bit, and for the year, it's in the red. So that's a little change, right? But not too bad. Nvidia is in the green. They're doing well. They're creeping up on Apple, trying to take the title as the most valuable company in the world. Microsoft's in the red year to date. Amazon's still in the green, but they had a down day. These guys pulled back after their earnings. So we'll see where Amazon goes. I think Google came out of earnings from the big caps in the worst, other than Tesla, but Google came out of earnings, kind of limping out of earnings. No momentum. The market did not like the amount of capital that's being spent on the data center, and maybe Google will see the writing on the wall that they better put up good revenue on the AI side or stop spending so much CapEx in the data center. Meta finally broke their they were on a 20-day win streak. They closed higher for 20 days in a row. That's very, very good. And they had a down day on day 21. Still up 22.37. No problem. From there, I mean, that's a pretty good year, and it's done it in six weeks. Tesla's down in correction territory. Big drawdown there. Broadcom's in the red, had a red day. So you see a lot of red there. So that's the rotation I'm talking about. Investors pulling money out of these big stocks and putting it elsewhere. These small caps are really exciting. They really go up fast, which is cool to watch. When we look at the sectors, who won the day? Energy won the day, up on 1.22. Materials keep doing well. Materials is in second place year to date, but just barely in second place. Communication services had a pullback today, but materials is really getting it done this year. I think precious metals, gold, silver, and copper is really valuable. The commodities are doing really well. So the material sector is doing really well. And if we kind of sort on the year to date, it's communication services still. They had a bad day, but they're still in first place. Materials, financials had a nice day. Look at that. Up 8.17. Consumer staples, utilities, healthcare. Real estate's lagging, and they've been lagging for a couple of years. It's hard to make money and really grow wealth with real estate companies. It's a different matter if you're investing in real estate direct. You can make a lot of money if you buy and sell correctly. Earnings calendar. So we've got earnings here. I'm going to come back to this and we'll take a peek at a couple of these that look interesting. But for now, I'm going to cover a stock that you guys want to cover, and we will jump to Bumble. All right, so Bumble, let me get acquainted with the stock. Bumble provides online dating and social networking platforms in North America, Europe, internationally. It operates websites, applications that offer subscription and in-app purchases, dating products. Okay. All right. 1,200 employees. Okay. And the stock year to date is down a little bit. For the 1 year, down a lot. 5 year, down a whole lot. Now, what looks really interesting is look at this forward PE. That's a pretty good forward PE. Tiny cap, 1.25 billion. Revenues, 1 billion. Where are these guys headquartered? Give me a second here. So they're in Austin, Texas. Okay, cool. So their market cap, you're like at 1 times revenue, which is really low for this type of industry. We'll see what their margins look like, but this type of industry tends to have a much ratio of sales to market cap. The down stock price is the reason for that. Analysts say hold. We'll see how many are saying hold, but it is slightly discounted. So the stock price has really been sold off. Now, what looks really interesting is there's a lot of green on the revenue growth. That's very positive. And when we look at the latest quarter, that is a small contraction, not too big, but it's still a contraction. I would have liked to have seen them maintain their growth, but that's not the case. So that is, in general, it looks really good. There is a red flag that, hey, what happened in the last quarter? How are you going to get your growth back? So this is September 30th is a quarter that we're looking at. They announced on the 18th. So their forecast dropped. Okay. So it looks like we haven't seen the new numbers come in here. So let me go out to the investor page for Bumble, and we can get the scoop on what's going on with this little company. All right, so Bumble announces their quarter. Revenue in 2024 increased 2%. In-app revenue went up some. Okay, so small growth. And this is just for the quarter. Paying users went up 5.13%. Okay. So they're increasing their app users. So that looks good. I guess they own a couple of apps. They have the Bumble and then the Badoo. And I don't know what Badoo is. Maybe it's similar. They repurchased some shares. That looks good. Here's their outlook. So this is what, according to that news headline, that investors didn't like. So the revenue is supposed to be 241 to 248. Okay, so when we look at Q1, the revenue is 267. So yeah, that would be about a $20 million decrease in revenue. So that could be disappointing to investors that, hey, you're slow, your revenue is really slowing. Well, what's the problem? So that is reason to be concerned, but I'm still interested. And the reason for it is, let's take a look at their margins and see how good their margins are. And we'll go from there. So here is operating earnings. So I had a big loss of some sort. So I'm not getting much here, so they had a big loss. I'm not sure what this is all about. I think this is a homework item of, hey, what is this loss? And we got to look at their balance sheet and their free cash flow history. Let's take a look at that next here. So we got the revenue at 1 billion. When we look at their free cash flow, it is positive. And you see how it's been growing. I really like seeing that. When you're growing like that, I'm a little more confident about the data. The data is probably going to be good. So the free cash flow looks good. At this rate, they're not growing, which is a problem. But even without the growth, this company, depending on how much cash they have and debt, let's take a look at that next. So they have 252 million of cash and about 631 of debt. So they're roughly about a 400 billion debt company. And I mean, their stock price is slightly discounted, maybe discounted by 10, 20% based on the free cash flow I'm seeing. And the reason the cash flow isn't putting a bigger number on their value is that they're slowing down. Why are they not growing? That's a big problem. These guys are in a industry, right? And I don't use dating apps, so I'm guessing at it. But I think my guess would be you could fall out of favor and the public doesn't like your app, and then your stock gets destroyed, like it's getting destroyed after hours. This one here is risky, and it hasn't shown. I mean, it's shown a little bit of rally here, but then it just went sideways. Year to date, it's down, and then after tomorrow, it'll be down 18%. So this one's got too many problems going on. They got to grow their business. If they can't grow their business, these guys are just not going to be all that relevant. They're not going to be all that valuable. When we look at what analysts are saying, 12 analysts cover it. There's an analyst that's very positive on the company. Worst case scenario is $7 a share, which isn't too bad. But man, that earnings is really tanking the stock. So this stock here looks like they're going to be profitable this year, 2025. That might change, like kind of the investor mindset around Bumble, but I'm still concerned about it. This one, I wouldn't even put it on my watch list. And the reason for it is I have great options. Like right now, I've got about 6 companies that I could buy into, and I've done some homework on them. I'm going to show you CRM Salesforce after I cover the stocks you guys want to cover. And that's a pretty good looking investment for me. I'd rather go into investments like that. Bumble is just a little too risky at this point. And I know some of these can really fly up. You can go from 1.25 billion to 3 billion and you just tripled your money. I get that. But you could also see this stock really go down like to $2 and then nobody wants to buy it because it's such a low price on the stock. So I'm going to pass on Bumble. And it looks like Carlos, very good to see you, man. Thanks for joining. It's been a little while. Good to see you. All right. So next one we're going to go over is Bill. And Bill is a software company for small businesses in the financial operations for small and mid-sized businesses. And it's a $6 billion company. I looked at this company like 6 months ago. It looked really good because they were doing really well. But I think recently they had a really bad earnings. They went from $96 a share to $60 a share. That is not good. Not good at all. So they're down 29%. Is it an opportunity to pick this up? Let's take a look. So fundamentally, they keep growing. That's good. They keep growing in the quarter as well. That's very good. So what did the market freak out about? So that's weird that the company keeps growing. The stock really sold off. Okay, so this looks really good. Their total revenue is 1.4 billion. That's good. That's good. Very good. Gross profit looks good. Get a percentage down here. This is a software company, so they're very profitable. They have a good profit margin, even though they're a young company. See how they went from losing. Now they're making money. Once you have scale in the software business and your product is mature, you don't have to keep investing in really expensive engineers and software developers. Your profitability explodes. So these guys are beginning to get profitable. This might be a good time to think about Bill. All right, so that looks good. Free cash flow looks great, 311 million. You see how you went from negative, then positive, and it's getting bigger. Again, I like data that looks like this because I'm more confident that this is just going to keep sloping up and keep growing in cash flow. So that looks good. Let me revisit their balance sheet. What's their balance sheet look like? How much cash and debt? They have more cash and debt. They surpassed debt by about $440 billion. So that's very good. Very good. I think I have a valuation on Bill. Let me take a peek. No, I guess I deleted it. I stopped following Bill, but let's take a look at some rough numbers. So they're growing really nicely. They have free cash flow at 311. So I would say this business is worth, $7 to $8 billion. And it's an exciting business. They're growing really well. And right now they're at 6 billion. They really dropped, man. So it looks like one of those formations in the desert. That is really, really weird. It really rallied in the November timeframe, and then it collapsed. So price targets are really high because analysts are probably still, forecasting that these guys are going to do really well. So these guys, 2025, look at their profitability. It's going to be really good. This is what analysts are looking at. That's why they think it's discounted. If this happens, I think this stock's going to work. It's making money. It's growing, generating free cash. It's checking a lot of boxes for me. Good to see you, Mike. You want to take a look at BAH? Yeah, we could do that. And then Starlink. Yeah, let's take a look at those. Give me a few minutes to finish up on Bill.com. All right, so this is looking good. This is a good stock to do some homework on. The first order is to read the earnings release in its entirety from start to finish. Understand, well, what's causing all the angst? Why are investors freaked out? You don't sell off a stock the way it was sold off. If it was like, well, they missed by 10%. Now, something's out there that is really scaring some investors. It is a small cap, so it doesn't take a lot to freak investors out. But I'd really want to be comfortable that, hey, there's not going to be another surprise that's going to take the stock from 60 to 30. Over the 5-year, this thing was, a darling for a while, and then it crashed down. Wow. So you see how the market can sell off a stock, man. It doesn't care. Get out of the way. It's a locomotive going down a mountain. So it's interesting. I think it's worth taking a look at. I'm seeing a lot of value. It is a software space. It's very profitable. This could be a valuable company. And they're selling into small and mid-sized businesses. That tends to be a place where the big guys, they don't play all that well in that space. And smaller players tend to have the advantage. So this might be a company that's really growing well organically, and it's going to be worth a lot more in the future. So Bill Holdings looks good. I think it potentially could be a buy for me, but there's some homework to be done. All right. So thanks for asking about that. And it looks like Jay Zav, what's your take on NRG? Okay, I'm going to look at that, but I'm going to look at BAH. And the other one was SBLK. Then Sabir, number 2, LRN. All right, so I'm going to go BAH, SBLK, and then I'll hit NRG and then LRN. All right, thanks for joining, everybody. We're 19 strong on the live stream. We're doing some deep dives into stocks that people are putting out there, seeing if we've got some interesting investments upon us here. So Booz Allen Hamilton provides management, technology, consulting, analytics, engineering, digital solutions, mission operations, and cyber services to governments, corporations, and not-for-profit. If these guys are dealing with the federal government, man, there is a lot of cost cutting going on at the federal government level. I'm sure you guys are reading the stories of how they're really cutting back. A lot of people are losing their jobs at the federal level. And that might be a story that impacts Booz Allen, who's like, hey, we were expecting to get some business out of the federal government, but they're not spending any money right now, potentially. That's one thought that I had when I read their description. So these guys are 15 billion in market cap, 12 billion in revenue. Their forward P is 17.26, a dividend of 1.85. Analysts think it's discounted by 34% and it's a buy. They're down 7% year to date, down 18% for the year. Yeah, it's not looking all that great. So these guys are services, and we just saw a software company. I'm expecting that when we look at this income statement, it's not going to be as profitable because you have to hire a lot of people. And a lot of these people are going to be professionally educated. You have to pay them a lot of money. And after you pay them, you don't have a lot of money left in profit. Let's take a look. They're growing nicely, very nice growth, steady. The quarterly looks really good. So that looks really good. Cost of revenue, almost 9 billion out of 11.7 billion. So the gross profit's pretty low. That's what I was pointing to. So we got gross margins 23.65. That software company was in the 80s, 81 or 85%. So that's the big difference. Their profit margin's decent, 7.35. But professional services companies never get to massive valuations. You could say that Accenture is one of the exceptions. And I would say, yeah, you're probably right, because they get into these long-term contracts where they're doing managed services and they get this recurring revenue that makes them really valuable. So that's a pretty valuable company. But heck, if you're Accenture's in the same ecosystem as Google, Microsoft, and Google, Microsoft are, mega multi-trillion valuation companies. Accenture's like 300 billion in market cap. So that's the biggest, most valuable in the professional services space. The biggest, most valuable technology is Apple. Second place technology, NVIDIA. Third place, Microsoft. So that's where the money's at. It's in having really, really broad margins and a lot of cash flow. Free cash is $844 million. It has grown over time. These guys have good revenue growth, but very bad margin or margins that I don't like. I try to say what I mean without being, kind of mean at the company, I guess. They have debt of $3.6 billion, $456 million of cash. So net, they're at $2.8 billion in debt. So they have some debt. I would value this company tops at 10 billion. It's just not that desirable business to me. If I'm going to put my hard-earned money into a company, I'd rather put it into a company that has got just great margins, good growth, and I think that over time is going to be worth a lot more. It'll be like Meta over time has just become so valuable. So that's what I'm looking for, is long-term wealth expansion. Take my money, I put 10,000 or 100,000 into a stock. I wake up 5 years later, it's worth twice as much or better. So if I put 10, it's worth 20 grand or more. If I put 100, it's worth 200 grand or more. And I don't think Booz Allen is going to get me there. Over the 5 year, these guys have done really well. I think their growth has been recognized, but they have hit a wall. And the wall is pretty steep here. So this one here is a pass for me. I'd rather not invest in them. And in the same ecosystem, you can invest in software companies or other like companies that I think can really grow one's wealth much faster. The next one we're going to look at is SBLK. Star Bulk Carriers. So we're going to go into some shipping. So yesterday, just a side story, personal story, I had the day off and I live in Southern California, and my wife and I went to San Pedro, and we went to this beach that I've never been to. I've been here my whole life. And it's like at this point by this lighthouse, and I saw that in LA, we have actually two ports right side by side, Long Beach, San Pedro. And so I was around all these ships and containers, man. It's incredible how many containers and ships are there. I'm talking like 1 million containers in there. It was really, really something. So that's what these guys do. They're a shipping company, ocean transportation, dry bulk cargo worldwide. So these guys do the dry bulk. So they're not like containers with product from China that's manufactured. They're taking like loose product. Okay, these are different types of ships. Got it. I did really well with a company, which was by the name of Panel, and I bought them when they were like 400 million in market cap. I think I tripled my money on it. So shipping companies can make us money, real good money. So these guys have up 9.6%, down 25.64. So interesting. So they're having a good year. Why are they having a good year? Is the shipping rates kind of causing, whoever companies or governments that are ordering this material, they're going to have to sail the material longer to avoid some of these tariffs, or I don't know. It's a tiny cap company, 1.93 billion. Revenue is 1.22 billion. So, okay. And that's kind of normal for shipping. Okay. That's just normal. Forward P is 9.42. Okay. That looks good, but it's kind of normal for shipping. Dividend is massive, 15.25. Wow, that looks good. 1 month. So they really got sold off over the 1 year. 5 year looks great. Yeah. I started buying Panel over here too. They sold somewhere around here. Okay, so these guys are sold off. Maybe it's an opportunity. So I'm going to check to see if they can afford the dividend. I'm going to also look at their fundamentals, their financials, just to see if the business is strong. So this is kind of a very cyclical business. They do well for a while, then they have a contraction year. Do well for a while. They did well for 1 year, began to contracted in 23, and then they're beginning to grow. Wow, they're really growing in the quarters. That looks really good. Why is their stock contracting so much when their revenue is so high? Interesting. They're going in opposite directions. If your revenue is expanding that much, your stock price should be going up. So you're seeing this pickup. So that's maybe the market is recognizing these guys are really doing well. Could be. It's the beginning of a rally, potentially. So revenue looks really good. It is cyclical, so you got to get in and get out. Okay. When you buy into shipping, there's two decisions you're making. I would suggest is you're deciding, okay, I'm going to buy, but I also need to know, when am I going to sell? If this, am I going to sell if it goes up 50%, if I double my money, and then I get out? Because these will come down, in my opinion. All right, so free cash flow looks good. 430 million free cash flow. This is a tiny cap. So that looks good. And gross margin looks good. Profit margin looks great. And when we look at free cash flow per share, $4.26. So high level. Yeah, they can afford the dividend. So the dividend, they can afford it. Let me take a peek at their balance sheet. How much debt do they have? Not much. So they have about 1 billion net debt. Not bad. Debt to EBITDA 2.71. And they're cranking out nearly $500 million of free cash. So that looks good. This company looks strong, looks good. This may be the beginning of a rally. This might be, the company gave up some of their stock price, and maybe it'll come back up to $35 a share. And it'll happen fast, because this is a tiny cap. Based on their free cash flow, this business is worth, $3 to $4 billion. Based on free cash flow. So this one looks really good. I've been kind of keeping my eye on Zim, because I've made money on Zim on 2 occasions, made money on Panel. So I've got a little bit of a hot streak in shipping. I think it's about time to get back into a shipping stock. So I'm going to put this guy. In fact, why don't we do this? Why don't we do a full valuation? We'll go head to head. Star Bulk Carriers against Zim. They're two different types of shipping companies, by the way. It looks like they announced earnings. The market does not like something. So we'll take a look at that. They announced it today. They announced a dividend of 0.09. So that is way lower. 0.09 per share. I guess they had a special dividend, and 0.09 is not going to be a whole lot. That would mean it's 38 cents per share, which means it's about 2.5% dividend. So this dividend is not, maybe there was a special dividend involved. All right, so let's take a look. We'll go and do a full valuation of this guy. And what I'm going to do is I'm going to open a different screen. I'm going to open up the data, and we'll build this valuation from scratch. We'll see what's going on with this company. All right, so we're going to compare this guy to Zim. Zim is in the same industry, and you can see the Z shipping stocks just get, I mean, they have so much cash being produced that they are really, in my opinion, worth a lot, but the market doesn't ever have the market cap go up because they're cyclical. It's almost like investors don't want the rug to be pulled from under their feet, so they're very careful with them. Understood. That makes sense. All right, so I'm going to copy my model here. If you like this model and you want a copy, you can become a member of the channel, and I give you access. You can play around with it, do your own valuations. So okay, so the symbol is SBLK, and it's for Star Bulk. So you see this discount rate is because these industries are so cyclical. I want my rate of return to be really high. All right, so I'll open up the investor page with the earnings so we can look at that together. It's a good habit if you're an investor thinking of investing, is you got to look at their earnings. So okay, Star Bulk. It's headquartered in New York. Okay, it's going to be a little hard to read, so I'll make it a little bigger here. Okay, so I guess they're in Athens, Greece. Their investor office was in New York. All right. Well, Greece, from my general knowledge, they really know how to sail. They really know how to make ships as well. So voyage revenues, this is the full year. This is for the fourth quarter. Both voyage revenues look good. Nice growth, nice expansion. And the net income was very good. So EBITDA looks great. Very good growth. Okay. Rebuying shares, that's good. So here's the dividend. They're going to buy back shares. So that's good. But the dividend isn't going to be as high as it was previously. So, okay. So the revenue grew really, really well. Now we're getting into assets. They've got cash, 436 million. That looks really good. And then debt down here, 1,047 million. So they have roughly about 700 million in debt. Oh, and then plus 223. So let's say they have about $800 million in debt. Okay. So that is I'm going to note a few numbers that I'm going to need in the calculations that we're going to do next. All right, so we'll put those in there, and then it was 436. Okay, cash flow. So cash from operating activities, 471. CapEx, 54. So net cash for the 12 months was 417. That's a good number. All right, so let's jump over to the valuation schedule. So the trailing 12 months, it was 417 million. Now, do I want to grow that? These guys are cyclical, so let's be conservative. We're going to go zero growth. Just straight line it. If it does better, great. If it does a little worse, no big deal. Okay. So cash, they had 436 million to 4. And then debt, they had okay. How many shares are outstanding? 117 million. So based on straight line cash flow and a very high discount, this stock's discounted by 10%. Now, when we look at the earnings per share for 2025, it's expected that earnings per share is going to be $2.71. Growth rate, there is going to be a growth rate there, so we just go to 0. Yeah, and the market isn't going to give them a 12. That's the best I could do there. So, this stock is it's valued more based on the cash flows it's going to produce. It'll produce a nice return. I mean, you have a very high discount, but the numbers with Zim are even better. I mean, the cash flow here is just freaking amazing. It's amazing how much cash they produce. And this business is really strong. And then you have these tariffs, right? So you may end up with Canada needing to import more from other parts of the world because they don't want to import from the US because there's that 25% tariff, that tariff war. And although they put them on hold, the whole tariff war could really cause a lot of shipping charges. So that's one thing to consider. So I'm not going to give up on Zim. I think I'm going to stay with Zim. Here's the valuation. I'm going to take a screenshot of this and send it to you, Mike, on Discord. but then I'm going to delete it. But for me, I'm still going to buy into Zim at the right time. And that's my evaluation of star bulk carriers. And let me come back to the Discord. Let's see. So I'm way behind on comments. So Mike, so you think BHL will do better later, potentially? And then, yeah, SBLK is getting killed. Yeah. Cool. Yeah. You're welcome, Mike, on the evaluation of SBLK. All right. So let me move on to the next one here. I'm going to catch up on the comments and then I'll keep going on looking at companies. All right. So we're good there. Okay, perfect. All right. So just catching up on comments before I go to the next one. So we got LRN is on here. We're good there. And then we got NRG's at the next one. Okay, cool. Nike, big winner today. Yeah, you know, the collab with Kim Kardashian, it's not, I mean, Michael Jordan was one of the first big names, right, that Nike, you know, signed. And that ended up being a winner for all parties involved. And I think it's a really good idea. Kim Kardashian is a big influencer and it made the stock really move. It went up a lot. It was good to see. Nike needs to start growing their revenue. I cover Nike. I own Nike. And, you know, it's nice to see it rise for one day. Right now, I think the stock is discounted by 15%. But if we can get the Nike stock to start growing, a lot of good things are going to happen. If that stock, if the top line growth doesn't happen, I'm going to get out of the stock because this is going to be a value trap. You see how they're not growing. The new CEO is trying to get, you know, things figured out, but they got to start growing. You're not going to be more valuable if you can't grow. So he'll have to figure that out. So CSA SAC stock up on coal and cash for the winter. All right. So CSA SAC. So you're looking at ACRE. Take a look at that later. All right, cool. So I think I caught up on comments. Thanks for hanging in there. Let's move on to NRG. So NRG Energy, together with its subs, operates an energy and home services company in the U.S. and Canada. It operates through Texas East West Services. So these guys in solar or what's? Okay. So they're a utility. Okay. So this utility has really gone up in stock price. It's a $22.67 billion company. A lot of these utility stocks have really gone up. Their PEs have really expanded. The principal reason is AI is supposed to draw a lot of power, and these companies are really going to do well in the new world where AI needs so much power. The dividend isn't all that great, 1.57, and it's a fairly priced stock according to analysts. It has had a great year. It's having a very good 2025. So when we look at the revenue, this is what I find is kind of perplexing is you have these businesses, utilities, they're contracting, but their stock prices are in a rally as if these guys are just killing it. but the data is saying, no, they're not killing it. They're actually losing revenue. So that's one thing that I scratch my head and go, how is this possible that a business is struggling top line, but their stock price is flying through the roof? So that's one of my unsolved mysteries of the stock market. They do have free cash flow. That looks good. Their margins aren't very good. It's a utility. So 1.2. I mean, this one here is, I don't like utilities. I think if you've attended my live streams and looked at my videos, I don't like utilities. They spend too much money on CapEx just rebuilding their plants. Like every 3 years, they have to rebuild the plant, it seems, based on the cost. And this one's maybe a little different, but it's still going to have a lot of CapEx. It's really the story that's driving up the stock price, but the facts really worry me. Why is the business contracting? Why is the revenue contracting? And if the story is that, oh, we need all this power, the data centers need all this power. Well, this top line should be growing like 20% per year. Instead, it's contracting. So that's a big red flag for me. They're not very profitable and the cash flow isn't very high. So this is a total pass for me. I don't like the industry. I think the industry is really bid up. You see how back in the day before AI, this thing would just bump along and investors in utilities would be happy with a dividend and a stock that really didn't appreciate very much. And now it's appreciated a whole lot. Well, what if this whole DeepSeek story of they have AI that doesn't draw as much power? Then Alibaba AI came out. They said the same thing. They come out with AI that doesn't need as much power. Well, these stocks are going to crash and burn. Their stock prices are just going to nosedive. We'll see. We'll see. Time will tell. I completely avoid these. I'm like, yeah, the numbers scare me. You should be growing your business if you're going to receive that type of stock appreciation. And it's not like for 1 year. It's for multiple years now. Their revenue is contracting. So I can't understand how the stocks are rallying so much. That's my review of NRG Energy. Hopefully you found it interesting. LRN. LRN Stride Incorporated. So Stride is a technology-based education service company. Okay. So these have been kind of being completely sold off. But this one is rocking. Wow. Wow. Impressive. So they do a lot of teaching to kids. Yeah. I mean, I raised 2 sons and I could tell you, yeah, parents will spend the money to help their kids learn and master subjects that are going to be important to them. Yeah, it makes sense. Okay. So good old fashioned learning. The stock's just on a tear. Wow. 728% return, $6 billion company out of a learning company. Wow. 2.19 billion revenue. They are profitable. Forward P is really reasonable, even though their stock price is flying. And their growth is good. It's not incredible, but it's good. 13% growth. That looks good. Again, not incredible, just good. Free cash flow. So this business is worth, like, depending on the amount of debt, it's worth about $9 billion. So So these guys, see how much debt they have. Gross margin isn't all that great, 38%. Profit margin's pretty good, 12%, but not a lot of margin there. And now when we go to their balance sheet, see how much debt they have. Not much debt. Perfect. So this business is worth about 10 billion and they're at 6 billion. Maybe 10 billion was a little high. Maybe they're fairly priced. So they are 320. If I multiply that times 20, we're at 6.4 billion. Yeah, that sounds about right. 6.4 billion. So they're slightly discounted, but man, this company's their stock price has really done well. Good for them. It's really expanded nicely. There's usually it's a technology-based education service, and there's another company out there, Chegg, excuse me, and they're getting their stock is completely getting depleted because AI is supposed to be a big threat to them. So how is AI not a big threat to these guys? Because AI does a really nice job of explaining how to do things to you. I don't know, but congratulations if you own Stride, man. This has been an awesome ride for whomever has it, especially over the 1 year, up 149%. Wow, that is great. Year to date, up 37%. Phenomenal. There are some people that are paying attention to it that are shorting the stock. 11% of the shares are shorted. So we'll see where it lands or if it keeps going up. Wow, incredible. So that's LRN. We're showing up 2 years late. The party started about 2 years ago. From there to here, you would have tripled your money. Yeah. But that is investing. Yeah, this one's a little tricky because maybe the stock is going to settle down at 75 or I don't know, 60. And boy, that'd be a big, big loss. So if I'm not in it, I'm not going to go after that. We'll see. We'll see who somebody else can invest in that. All right. So, all right, with 21 strong, Joseph, you want to look at Pinterest? All right, I'm gonna put it on the list. You got at least one ahead of you, but Pinterest has been doing well. All right, I think somebody want to look at a company or a symbol, ACRE. So Ares Commercial Real Estate Corporation. So they do loans for commercial real estate. They're down 40%, down 70% over the 5 year. Tiny company. The revenue is really small and they're losing money. Forward P looks okay, 12.78. They have a big dividend. Okay, so wow, what happened here? So they had a lot of loan losses. This is commercial, right? So commercial real estate's really took a hit because of COVID. A lot of commercial buildings were empty. So they took a lot of losses, and that's what created a net big loss in revenue. That's behind them. So now they're generating revenue. Okay. This one's risky, but if you're confident these guys are going to make it, this stock's probably going to work. It's really low priced. So if they just survive and start growing, the stock's probably going to work, probably reward some investors. you got to really make sure you understand what they're into. Are you comfortable with their business? Because it's sold off for a reason. So this is commercial. Is commercial going to bounce back? I think it's going to bounce back a little bit. I know companies are asking their employees to come back to the office, but this one requires a lot of good homework. It is a super small cap, so you can really be rewarded on a stock like this, but it's just riskier. It's not like buying, something that everybody knows about. All the information is known, literally. This one here, you got to go search the information. A lot of investors wouldn't touch this. They're like, oh, too small. Never invest in it. But retail investors might. And it just takes one big investor to come in and say, hey, I want to buy into this. And then this stock will really fly up. So that is Aris Commercial. All right. So Tomas, how you doing, man? And is that a symbol there, Tomas? Active? Do you have a symbol you want me to look at? Active Energy Group. Can you clarify if you want me to look at a symbol? And I'll look at Pinterest in the meantime. So Pinterest is doing well. I noticed them. And year to date, they're up 35%. For the 1 year, up 11%. So they really had a rough 12 months. Hasn't been a smooth ride. But now they're beginning to work. Look at that. PE seems reasonable to buy with a 10% discount. Market cap, 26 billion. Revenue, 3.65 billion. And the revenue is growing nicely, 20%, almost 20%. And free cash flow. Okay. So these guys are worth about 22 billion to 25 billion, and they're priced at 26.67 billion. So they're fairly priced. They're right around their net pricing, and they don't grow like Meta, and they don't monetize like Meta. These guys are revenue 3.65 billion. Meta's growing at a clip of, they grow by like $18 billion each year. So they grow just in 1 year, they grow 6 times the revenue that the total Pinterest is. That's why their valuation's here. And Meta's 1.8 trillion. So these guys are okay priced. I don't think there's a home run here. And you can see that the business is really hasn't gone up like Meta. So this one here, Meta is my number one holding. I own over $300,000 of Meta. So I wouldn't be looking to buy into a competitor of Meta's. I buy like companies, but not exactly. Like Pinterest is a direct competitor against Instagram, in my opinion. So this is it. Meta, I still think, is discounted, by the way. And today it got a nice little haircut. But Meta is discounted by 26%. They generate gobs of cash, and they're worth a lot more based on their cash. Earnings per share look good. So it's still discounted by 26%. If I was going to invest another dollar and I had the choice between Pinterest and Meta, I would go with Meta. So yeah, thanks for bringing it up, Joseph. Pinterest. I've known of Pinterest for a long time. Some social networking companies like Pinterest, Snapchat, they just never took off like Meta. Meta just took off like a rocket ship. All right, let's take a look at PayPal. So PayPal's been working. It's a little bit kind of avoiding the radar. Hasn't been doing so great that everybody's jumping on board, but 33% return over the 1 year looks good. It's had a good pullback. It's pulled back 7.81. It announced on February 4th. And you know what's interesting? Let's go to this chart here. The market, it's like the market picks on PayPal. You see these pullbacks, these are all like earnings. So this is an earnings. And if we go back 3 months, this is February. So we'd go back to beginning of November. Hey, look at here. They announced their earnings and the stock gives up 8%. And then if you go back 3 months from there, you'd go to the end of August. And look at that. So it seems like every time PayPal announces, the market's looking for bad news. Like, oh, what can we criticize? But the thing this stock was worth a lot. And a lot of stocks had this run, like Robinhood. That's been from a percentage standpoint, that's been the best winner I've had in the last 12 months. So Robinhood went from, come on, I'm trying to get to this peak. There we go. That's close enough. So Robinhood sold off 84% and really higher, more like 86, 87%. The market's like, Robinhood stinks. They're terrible. And then investors like me were like, no, I think they're really cool. I think they're like really setting their own rule book. They don't follow the rules. They're breaking the rules. They're growing, kicking butt, and bang, right? So back to our friends at PayPal. So PayPal still caught up in this. Oh man, it's a bag of losers. It's sold off by 83%. I believe that this stock's going to double very quickly. And it's up 34% over the 1 year. This pullback is an opportunity in my book. When I look at the valuation of PayPal, based on their free cash flows and all other things, they are discounted by 86%. Let me get rid of this. So they're providing a really nice discount. They have great cash flows, earnings per share there. I think they're growing their business. So for whatever reason, see this growth here. They're very good size. They have the Venmo business. They have the crypto business. They just got to keep growing, figure out how to get exciting again. Maybe if they can acquire a business and they can kind of just have a little more pizzazz, I think this stock's going to take off because the fundamentals look terrific. I'm glad they're having a good return. It's not getting out of hand. I mean, I'd rather see this thing do what Robinhood did, but I think it's going to do it. I think it's going to do it over the next 1 to 2 years. It's going to double in value. And I'm going to stick around. I'm actually going to buy more shares and take advantage of that pullback. Thanks for bringing it up. What are you planning to do on that, Sergio? I'm sorry, Tomas. How are you going to play it? I think it's a good stock. I mean, I think I've said that a couple of times. I've covered PayPal on my channel for years, and it's incredible how the stock market, it's almost like it's a bully, right? It picks on certain stocks and keeps picking on them. So anyway, so that's PayPal, Tomas, and let me know if you need anything else. So Joseph, what consumer discretionary stocks do you like? So right now I have I was lightening up so these are the stocks that I really like. Alibaba, Mercado Libre, Amazon. Those are solid. I really like Airbnb, but I have $117,000 of that stock. I'm going to bring it down to 80. And I do like Nike. And now that Kim Kardashian's on the team, that's great. I'm going to bring this down to 20 grand. I'm waiting for the CEO to turn the ship around, then I'll buy more shares. And I just own too many shares of Airbnb, but I like Airbnb discounted, but I'm a little concerned that they're spending too much on this whole AI data center thing. Mercado Libre is rocking. I'm got no problems with Mercado Libre. Alibaba's been just doing great. So those are my consumer discretionary stocks. All right. So Joseph Aragon, I load up the bote with hood stock. Yeah. Yep. I'm loading up on hood without buying any more shares because the shares keep going up in value. And now the shares are really valuable that I own, which is cool. And sir, that's interesting that hood simply follows Bitcoin price. Interesting. Yeah. You might be right. But they're doing other things that are exciting. They're going to come out with and they have their own phrasing, but you'll be able to bet on sports on Robinhood. They call it something else. It's not betting. It's not gambling. I forgot the terms they use. All right. So, and I would politely say that if you really want a stock that follows BTC, obviously MicroStrategy, but another one that is closely follows BTC is Coinbase. I own Coinbase. I've done really well with Coinbase. But I think Robinhood is different. Robinhood's outperforming Bitcoin, by the way. Robinhood's doing far better than Bitcoin. All right, retired guy. All right. IoT stock. Internet of Things, huh? And let me read a comment real quick and I'll come back to you. So you bought below 65. Very good. All right. So we'll be really happy when it hits 140. All right, cool. Very good. Yeah, and you and I are on the same page there. Cool. I like you and I, Mike, like BTC, right? We're good. We are good there. And I agree with you. The MicroStrategy follows BTC. I mean, they're going to change the company from MicroStrategy to Strategy. So, all right. So, all right. So IoT. So this is Samsara. So Samsara provides solutions that connects physical operations data to its connected operations cloud in the United States. So Internet of Things is when you have like machines that are connected to the internet and are feeding data or receiving data, and they're basically somewhat self-operating. It's not quite robotics, but it's just part of a network and it's Internet of Things. Some sensors would communicate with a central server or a central application that would be like, hey, that machine's overheating, or hey, this maintenance has to be done over there, or, something trigger an alert so that the enterprise app would know about it. So that's Internet of Things. This company for the 1 year, it's done really well, up 77%. It's rocking year to date. 165, very cool. And this does have a place in the new world of AI. So this is a good idea. It is a $34 billion market cap company. That looks real good. $1 billion in revenue. So you're paying 30 times revenue or so. Forward P is really high, 231. Wow. That's an expensive stock. The revenue is impressive, 39%. Very good. Very, very good. Growing really well. Okay. They're not generating a lot of free cash, but they are generating a little bit of cash now. That looks good. Gross margins are nice and high. So that looks good. This is a good looking company. It's a little, I'm a little unsure because there's no free cash flow there. And 14 analysts cover it, and they believe that the stock's overpriced. The stock has appreciated a lot. So it's hard to argue with that sentiment. They're not going to be wildly profitable. They're going to be barely profitable in 25 and not grow. Well, they're going to grow quite a bit percentage wise. It's still not that much value. Their forward P is 272 and it falls to 212. That's not very profitable. So this one here looks really good for the investors that have owned it. Congratulations. But I just don't think it's worth it. I think it's priced too high. I kind of missed a boat on it. Would acknowledge it. But yeah. One thing I would say is I don't know of a lot of companies that are doing this, that, hey, these guys are doing Internet of Things. I mean, there's some other companies that do it. These guys are really focused on it, so they're probably going to do well. If they can sustain this growth, I think they're going to continue to grow into their valuation or the stock price that they have. But if they miss a beat, the stock will crash. Like, you see this crash here, this crash here, this crash here. If they show any sign of weakness, the market will sell this thing off. But so far, so good. Looks good. I think it was Retired Guy, right, that asked about that? Retired Guy, yeah. Yeah, good luck with that. So BKNG, is that Booking? So Booking's done well. We looked at it this past weekend, compared it to Airbnb. The 1 year, 38%, the 5 year up 158%. It's outperformed Airbnb. And I think they've grown really well. They've diversified well. What's up with this pullback? So it's a good company. Growing really well. 23 billion in revenue. That's bigger than Airbnb. They're more diversified than Airbnb. It is kind of a conglomerate of acquired businesses within the travel space. So it's not, they didn't grow organically to build up to 23 billion. They acquired some businesses along the way. But they're still doing really well, growing at 11%. Their free cash flow looks really good, 8.5 billion. In my mind, they're fairly priced. So if you look at that cash flow, multiply it times 20, you get up to 170 on the button. And then I don't know if they have any debt. They really don't. They have about 1 billion in net debt. So these guys are fairly priced. $170 billion of market cap. And that's a big market cap. And they built it over the last couple of years. 158%. So Booking has gotten it done. I just don't know. You saw me, I'm selling some of my shares of Airbnb. I think the travel industry is going to get a little worse. And the reason for it is I'm already seeing the economy turn a little bit. And I think that travel, whenever you have a turn in the economy where you have recessionary times, travel is one of the first sectors to get hit. It's like, okay, people stop traveling. They don't have money, they don't travel. They don't feel confident, they don't travel. They just stay home. And I think we're beginning to see some rumblings. You got inflation heating up, interest rates are high. Um, you're hearing more and more employers lay people off. The federal government is laying off like 10% of its employees. It's going to be a massive number. So we'll see what happens there. Thanks for asking about booking. Good luck with that. Yeah. Good night, Mike. Good to see you. Don't understand BTC. Well, you either believe or you don't. But I would tell you that gold, right? I don't understand why people like gold. I don't see why people they value gold. It's like you can't eat it. You can make jewelry out of it. You can make electronics out of it. I get that. That's it. So why is an ounce of gold worth what it's worth? Why is a Mickey Mantle rookie card, trading card, an original, worth a bunch of money? Scarcity. And same thing with gold. And same thing with Bitcoin. Bitcoin is digital. So there's some things, Sergio, that, you know, you kind of, you just need to understand high level. There's scarcity and people buy certain assets that they feel are scarce and will be, you know, in my book, if it's easy to believe in digital assets when we're so darn connected. I'm broadcasting a live stream worldwide. I think, Sergio, you're in Portugal. Tomas was in Argentina. I'm sure some of you are in other countries. We're fully digital and we've been connected for a while. So digital assets should be a part of our world now. I totally am on board with that. And I get that much better. Owning Bitcoin makes a lot more sense to me than owning gold or owning a desirable, you know, trading card, baseball cards, or jewelry or art. I never understood art. I get the Van Gogh. I mean, I've been to the Van Gogh Museum in Amsterdam. Beautiful. The story of Van Gogh is tragic, but interesting. How he changed his style of painting, where he painted quickly, was his own style, right? Love that. Eat it up. But you look at one of his paintings, they're priceless and they're, I don't know, they're like hundreds of millions of dollars. I don't get that. I'm like, I would never invest in an asset like that. So some people get Bitcoin, some people get art, some people understand gold. Invest in what you feel comfortable with. All right. So have I ever looked at IBM? Yeah, IBM's been doing well. IBM's been doing really well. I think last time I looked at it, up 40%, up 82% over the 5-year. So it's getting it done. Up 20%. So yeah, this is an old school technology company. It's still a pretty big cap. They produce cash. Forward P is 24. It looks pretty good. They pay a dividend. Looks like they're priced a little expensive, but IBM is IBM. They've been around forever. They started making typewriters. Then they went into more technology, like back when we were making mainframes and stuff. IBM was a big mainframe player. Then they came out with mini computers, the AS400. They started writing software, but got away from software. Now they're a conglomerate. They do a lot of professional services. So, all right. So that's IBM. Yeah, I mean, I never understood gold. Some people do. I have some good friends that are really good investors. They believe in gold. Cool. I don't try to talk them out of it. I'm like, you do you, I'll do me. Cool deal, man. That was a cool live stream. Thanks, everybody. We covered a lot of stocks today, and see if the market's showing us what it's going to do tomorrow, or at least giving us a hint. No, there we go. It's supposed to be green tomorrow. So I just don't see any big story. And we're through the big earnings, although the earnings next week, like the earnings today, I don't think there was any like big earth movers. But Nvidia is going to announce next week. There's a couple big ones, but the biggest one being Nvidia is going to be next week. And I think that one will move. That one will move Earth, make it rumble. Tomorrow, HSBC, which is a big bank, Analog Devices, materials company, Carvana. So we'll see what happens there. And then Thursday, is this Thursday? Yeah. Walmart, Alibaba, looking forward to that. Booking is coming up. Mercado Libre, that'll be a fun day. Newmont will announce. And Friday should be Grab. Man, that's been catching a lot of attention. That's announcing. So next week, when is Nvidia on Wednesday next week, and then CRM. So I'm going to record a video on CRM. You guys can watch it on my channel because I'm going to shut down the live stream. But I'm really liking what I'm seeing out of CRM. I'm going to buy it ahead of the earnings announcement. All right, everybody. Yeah, Walmart will give us insights on what the consumer is thinking. And it is a quarter old, right? Because they're going to give us kind of a rear view mirror kind of, hey, this is what we saw in Q4, or maybe their Q1 might be because they have a retail calendar, so there might be in the Q1. And yeah, it'll be revealing of where the day is. Nichix, NU, and Mercado Libre. Yeah, that'll be cool, man. I'll for sure cover those. Good to see you, Nichix. All right, guys. Well, thanks for tuning in. That was really cool. I appreciate you guys. And good luck with your investments, man. I hope you guys are making the right moves. One last thought is, I think I've shared it with the community that we have as investors is I'm building up my cash position. And I'm not like paranoid. Oh my God, I got to sell out of like half of my stocks. No, I'm just gradually taking money off the table, dollar cost averaging out of like 4 or 5 stocks and building up more cash. Cause it doesn't take a lot. I think the beginning of this year showed us that, like when DeepSeek came around, it kind of scared the market a bit. We get a couple more stories like that and the market can really sell off. I want to make sure I have some cash around so I can buy into maybe some stocks that are going to be really well priced. So that's my story and I'm sticking to it. Everybody, thanks for tuning in. And I'll try to live stream tomorrow evening. If you're around, same time, and we'll go from there. Take care, everyone.